So many of you have been listening and finding out that a lot of the major brokers are definitely cutting out commissions. All right, are cutting out commissions. Ally Invest is the latest to slash online trading commissions. So we're going to look at a couple of online brokers, but we wanted to look at Ally because they are one of our broker partners directly tied into VectorVest. For those of you who are new, we do have a tool within the software called RoboTrader, where you can actually use that tool as a catalyst between the VectorVest software and your broker. In this case would be Ally. It's one of three that we have. And you can actually trade directly from the software to the Ally broker through RoboTrader. So keeping that in mind, with these trades coming up as no commissions, Ally Financial Online Brokerage and Wealth Management arm joins the pack in eliminating commissions on U.S. exchange-listed stocks, ETF, and option trades. That's on the U.S. side. For those of you who are in Canada, I don't know how that's going to affect Canada. But in the U.S., they're cutting it down to zero. Effective October 9th, which was yesterday, the per trade price of $4.95 moves to zero. Now, I do have a Robinhood account. And in Robinhood, they came out as a brokerage with no commissions. And I was wondering how long it was going to take for companies to feel the effect of Robinhood, people migrating over to Robinhood. And it's interesting that Schwab, Interactive Brokers, TD Ameritrade, now Ally are all falling into that no commissions. Now, my thing is, how do you make money as a broker if you're not charging commissions? So I did a little thinking in the back of my head and said, all these years, the commissions was what they were. They were making money hand over fist on investors. Because if you can now go from way back in the day to $50 in, $50 out, $100 round trip, to now being in today's time, being down to zero, that means commissions weren't needed. They did not need commissions to make money. How do they make all of their money? With all of the assets they have on hand. That's where the money comes from. All right? So just very, very interesting. Kirby says, saving us $3.95 per trade with RoboTrader. And Ally is my broker because it's connected to VectorVest. He removed my commissions like the other brokers and kept my options contract to 30 cents. Way to go, Alessandra. Fidelity joined the no commission group today. Look at that. So everybody is trying to vie for the business in this space of online brokerages. And now look at that. So not only, who did you say that was? Fidelity. Kirby says, Ally has the very best customer service. You actually can talk to a person quickly when you call. Look at that. So Kev says, are we being pimped? I ain't saying being pimped. I'm just saying that brokerages made. Think about that. How quickly are all of these brokers falling in line? Because they were like, well, the commissions were really the icing on the cake, so we can do without it. As long as we have the amount of money that we have on hand that we're managing, that's where the money is being made. So very interesting. E-Trade zero as of the 7th. So let's talk about that. Let's go look at the effects of that. We're going to start with Ally. The story was Ally. Ally is nicely below its value, good upside potential. The safety is not there, but it's got good upside potential. What's hurting it right now? It's going down. So you want to know something else that I read about these, and all three of these are what we're talking about: Schwab, Ally, and Ameritrade. Notice that the RTs on all of them are below 1. So I was curious to know why those are as low as they are. All right. You would think that with zero commissions that they should be running. You would think that. So I read an article, and the article stated that because it's going to be more risky for these brokerages, because people who may be novices are going to be more inclined to trade a little bit more recklessly because they don't have to worry about commissions. So I'm trying to think of the validity of the story. Do you agree with that or not? All right. And Alessandra says Ally was just downgraded. So this is part of why they are being downgraded, is the idea that novice investors will invest a little bit more recklessly because they don't have to worry about paying commissions. Do you guys agree with that or not? That is a lot of why they are being downgraded, Alessandra, and that's why their RTs are below the value of 1. So I'm curious to know, do you guys agree with that story or not? Kirby says, but Glenn, now that the icing on the cake is minimizing, their earnings may be down as well. Notice that all of these companies have an earnings per share greater than $2 at least, and they're all growing their earnings at a clip of double-digit growth. So, Kirby, good statement, but we won't see the effects of that until this goes into effect for a little longer than what you see right now. No low commissions have been around for novice investors way since the day it cost you $75 to do a trade. And you're right, because I barely remember the days where it was $100 round trip. And then the big number after a while was $9.95 per trade, and everybody jumped on board to $9.95 a trade. Now everyone is getting down to zero commissions. So think about that. Commissions were really icing on the cake. I do not agree with the article. It's still my money and I hate to lose a dime. I hear you, Badger. So Tom is saying pretty much that with commissions or without commissions, he's going to invest either way with the aspect of not trying to lose money regardless. So I hear you. I just wanted to hear your input on it. All right. So those are all three stocks. Notice that all three, Schwab, Ally, and Ameritrade, all have good upside potential by way of RV. Notice that Schwab and Ameritrade have decent safety values where Ally does not, but all three are in a downtrend. And Ally, even though the safety is not there, is the only stock out of the three that is a hold recommendation. So comparing all three, if I'm looking at which one I want, let's go look at the graph to make a decision. So I got those three highlighted. Notice that they're all up today. Let's go view the stock graph. And let's see if I had to make a choice between either one of those. Let's put this on a 3-month graph. All of them probably will be below the 20-day moving average. But notice Schwab starting to make a nice little move coming up off of a level of a low. Not a lot of movement. Got some dojis going on, indecision. Not a lot of movement. And look at the earnings per share. Man, oh man. All right, let's go see what the other ones look like. Ally, bouncing off of a level of support, still below the 20-day moving average, but like the earnings per share on it. Remember, earnings is the engine that drives the stock's price higher. I do like the earnings per share on Ally. I feel that it's a higher probability to get above that level of the 20-day exponential moving average. But look at from this high that occurred on 9/13, look at the trend of the stock moving down. And I think that all three are going to be exhibiting the same things. Ameritrade took a gap down twice. No, actually, that's not the... Took a gap down. Look at the earnings on Ameritrade. So the only one that does have positive earnings is the Ally stock. All right. I do like the rebounds on all three, but if I have to go pick one, it's the Ally stock because the earnings is much better than the other two. All right. And Ally pays good dividends. Let's go there it is. Ally has a dividend of 68 cents. Let's go look at, Ameritrade has a dividend of $1.20, and let's go back up to the top one. Schwab has a dividend of 68 cents as well. So all three pays a dividend. And Mary, I'm with you. Mary says Ally is my pick. I think that if I had to make a decision on the story based on all three stocks, Ally would most likely be my pick as well. All right, so those are all of my stories for today. Here's my watch list of all of the stories. And you know what I like about this watch list of stocks? I look at the overall watch list average. Relative value, relative safety tells me that these are prudent stocks. The stocks are all together as a whole going down, but they all have a VST put together greater than 1. The earnings growth rate as a whole is 11%. I love this watch list average, and I'm going to talk more about it every week when we go through this process at the end. This gives you a nice feel of the stocks in the stories and how they, by way of VectorVest, how they look. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.